government would have to say something along the lines of, we're returning to a gold standard and we stand ready to buy or sell gold at $30,000 an ounce. And, that's the new price of gold. And so the minute they did that, by the way, the dollar would, the value of the dollar in terms of everything would go down substantially. And inflation would be extremely high on a one-time event, extremely high. But, we would finally return to some form of money that, the dollar would have a gold backing. Gold's going to do fine versus fiat. I mean, I see gold 10,000 easy. I mean, probably much higher, but I can easily see 10,000.
Donald Trump's interest in gold dates back to the 1970s, shortly after private ownership of gold bullion was legalized again in the United States. At that time, Trump reportedly made a bold investment in the metal, buying it at around $185 and selling it between $780 and $790, a substantial gain that cemented his belief in gold as a valuable asset. LawrenceLepard, a professional investment manager, says the current administration appears to understand the importance of Bitcoin and gold because neither can be created out of thin air. Both assets offer a level of monetary discipline that fiat currencies lack. According to Lepard, any credible path toward restoring trust in a national currency will likely include components like gold or Bitcoin, assets that exist outside the reach of central bank money printing. During Trump's first term, speculation over a return to the gold standard picked up steam. He made favorable remarks about the idea, once calling it wonderful, and surrounded himself with advisors like Judy Shelton and John Allison, well-known proponents of gold-backed money. Since returning to the spotlight, Trump has rekindled interest in America's gold reserves, notably the 147 million ounces reportedly held at Fort Knox. Alongside Elon Musk, he has openly questioned whether the gold is still fully intact. Musk has even proposed a formal audit of the vault. Lepard says the key lesson for investors is to own what cannot be printed. The government is left with few choices other than to continue expanding the money supply. Even without hyperinflation, sustained inflation appears inevitable. Gold and Bitcoin remain two of the most reliable assets for shielding against the erosion of purchasing power. He adds that authorities could one day declare a new gold price, perhaps $30,000 per ounce, or peg the dollar to Bitcoin at $1 million. Such a reset would likely produce a massive inflation shock, but could also re-establish credibility in the currency system. The tricky part, Lepard concludes, would be determining the right peg price. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
But what I think happened is there was a gold pool in London in the 60s from 61 to 67 before it blew up. And I think Johnson got conned into sending some of our gold over there to help support the gold pool and didn't get it back and was pissed off. And so it was interesting. Trump and Besant came in and they said, Trump said things like, well, he who has the gold makes the rules. And we're going to audit Fort Knox. And my guess is what happened is they got read in on this. And then they got read and said, sir, not all the gold's there.
That's it.
And yeah, thank you. And so what they've done is they've started bringing gold back, and that's why we saw these big imports out of London, and they're probably trying to replace it. But Besant is definitely a gold guy, and he's a sound money guy, and he's actually a Bitcoin guy too. And I think Trump kind of basically understands it, although I think he takes advice from his advisors. But some interesting data points out there. Andy Schechtman said that Judy Shelton told him that she had spoken to Trump, and Trump said, she's proposed a gold-backed treasury bond, which would be a great thing. That Trump said to her something along the lines of, yeah, maybe Judy, that's something we float in the summer of 26 when we have our 250th anniversary of the signing of the Declaration of Independence. And so, so there's some thought. I mean, and Besant has said things like, we need another Bretton Woods. He recognizes Triffin's dilemma. We need another Bretton Woods, and if and when we have it, I want to be at the table. So this is within a 4-year window, because these guys, may or may not get reelected in 4 years. I mean, so it's clear to me that it's being discussed. This kind of a reset that I'm talking about is being discussed at the highest levels of the administration. Now, whether or not they'll have the political will, the guts, the courage, the ability to pull it off, I don't know. I think they can pull it off. I mean, it's interesting because in theory, all the rules about the monetary system should be controlled by Congress. I mean, that's what the Constitution says, right? Article 1, Section 8, gold and silver can be money, blah, blah, blah. But as a practical matter, presidents have set the rules. I mean, Lincoln just created greenbacks out of thin air. Wilson, signed the Federal Reserve Act and took all the power away from Congress, or Congress passed the act, but Wilson signed it. Roosevelt just stood up one day and grabbed the gold and reset it. Nixon one day just said, "Hey, guess what? Your foreigners, your gold, your gold or your dollars, we can't exchange them for gold anymore. We're not doing that." So these were all executive actions. So it strikes me there's precedent for some kind of an executive action where Trump/Percent say, "Hey, guess what, guys? We're revaluing gold, or we're revaluing Bitcoin, and we're going to start issuing gold-backed bonds, Bitcoin-backed bonds, and we're going to put this whole thing back on a sound money footing." I think that's a very strong possibility. And of course, if it did, if you do any kind of math, there's absolutely no way they could take an action like that without having the price of Bitcoin and the price of gold go multiples higher of where they are right now. Just multiple, because of all the fiat money that's been created. So to balance the two, you've got to have a much larger supply or price, of gold, and a much larger price of Bitcoin. Luke Groman has commented that every $4,000 move in the price of gold puts $1 trillion into the TGA, which could be used then to pay down the debt. But the debt's $37 trillion. I mean, that's a great question, and the great difficulty in doing what I'm talking about is knowing what the right number is for both of these. But basically, the government would have to say something along the lines of, we're returning to a gold standard, and we stand ready to buy or sell gold at $30,000 an ounce. And, that's the new price of gold. And so the minute they did that, by the way, the dollar would, the value of the dollar in terms of everything would go down substantially. And inflation would be extremely high on a one-time event, extremely high. But, we would finally return to some form of money that, the dollar would have a gold backing, or they could do the same thing with Bitcoin, or a Bitcoin backing, and say, the government stands ready to buy or sell Bitcoin at $1 million a coin. The difficulty is knowing what level is the right level to create trust and to balance the buyers and sellers on both sides of that transaction. And that would be extremely difficult to figure out. But, more realistically, probably what will happen is we'll lean in that direction. I mean, this is what I think they're thinking about with this Bitcoin strategic reserve. They own, we think, although there's another area they've kind of gone quiet. I mean, have they done an audit to know that they really have the 200,000 coins that they say they had, Biden said they had, or will the Lummis bill pass and they start buying Bitcoin to basically defease the debt, which is what they should be doing. But, there's so many policy levers that the government has that it's just impossible to know all the permutations of where we're going. But suffice it to say that this administration is a lot different than the last administration. I mean, they recognize Bitcoin's important. They recognize gold's important. They recognize that these are currencies that can't be printed. And I think they recognize that having a sound currency would lead to a sounder country. So, so knowing all of that, how do we go from point A to point B? It's going to be very, very, tumultuous and confusing. But I know, I often say, I mean, I wrote the book, I call it The Big Print. I'm a little worried maybe if it doesn't happen in 5 years, I'm going to look like an idiot. I don't think there's much chance of that. But I know which, as an investor, all you really have to do is on any particular investment, all you have to do is know which side of it you want to be on. And I like the side of it that I'm on. I mean, I like being long gold. I like being long Bitcoin. I mean, we have inflation in our future, a lot of it. Is it hyperinflation? I don't know. Probably not. Hopefully not. That's really a painful thing. But is there inflation in our future given the debt situation we've got and the construct of the political system we've got? Absolutely, absolutely. And these two assets protect you from that inflation. So I know, I feel strongly that which side of it you want to be on. The path, I don't know. I mean, I've been very wrong. To discredit myself, I mean, I'll tell you, in 2008, I thought that was it. I thought, okay, here we go. When they did ZERP and QE1, 2, and I thought, my God, they're printing so much. This is nuts. This currency is going to fail. I was convinced of it, absolutely convinced of it. I was dead ass wrong. The reason I was wrong is they figured out how to bottle it up by paying interest on excess reserves and keeping a lot of that money supply in the banks. So what they did is they really just bailed out the banks, and it didn't seep through to consumer inflation. Now, it did leak into asset inflation, which is why we got the everything bubble, So it's hard. I mean, we'll just have to watch the cards as they get turned over. But let's go back to first principles. You want to own what they can't print because they have to print mathematically. It's not really debatable. I mean, unless you think they're going to go for a depression, which is always a possibility, but I rate that as a pretty low probability.
LawrenceLepard expects gold to reach $10,000 eventually and Bitcoin to climb as high as $1 million, depending on how aggressively governments continue to print money and expand fiscal policy. Regardless of the exact trajectory, he sees both assets gaining significant value over time. While the Federal Reserve is widely believed to be tightening policy, the data tells a different story. Since bottoming out in mid-2023, the U.S. money supply has grown by over $600 billion, casting doubt on the idea of real monetary restraint. Using the Rothbard-Salerno true money supply metric, year-over-year growth hit 2.2% in April, up from 1.4% in March. Month-over-month, TMS rose 0.6%. Over the past 12 months, 8 have seen positive growth, providing clear evidence of continued expansion. This trend follows years of extraordinary stimulus. The Fed injected nearly $5 trillion during the COVID-19 crisis, and close to $4 trillion during the 2008 crisis, excluding additional trillions created through credit expansion under zero interest rate policy. The long-term result is a structurally weaker dollar, eroding purchasing power, and rising systemic risk. In this environment, hard assets like gold and decentralized alternatives like Bitcoin stand out as critical hedges against monetary debasement and financial instability. Let's get back to the interview.
We know they have more than they've reported, and the reason we know that is we know what they mine every year, and that only takes you kind of to a little above what they reported. But we also know what they've imported from Switzerland every year because the Swiss have export data that we've seen. So China has a lot more gold than they're saying. Yeah, and central banks are buying gold, and this is because, and you really, other than El Salvador, you really don't see any central bank, or very few. I think Bhutan might be doing it, but you don't have any
Czech
major
Republic was actually like considering it with
Is
the
that right?
governor.
Oh, that's good news. Okay, but
Yeah,
basically, you don't have any central bank buying Bitcoin, or very few central banks buying Bitcoin, and it's just because it's not a proven enough asset class. They're not comfortable with it yet, et cetera. I think that'll change over the next 5 or 10 years. But yes, they go to the tried and true sound money alternative that they can hold on a bearer basis. I think it's interesting. If you've seen more and more central banks saying, who have their gold custody somewhere else, I mean, they're like, well, send it back to me. Because they recognize that in some kind of a big currency event, possession will be 9/10 of the law. So yeah, the central banks will probably try to reset to gold first. I mean, and I've often said, and Jason Lowery had a book on this thesis, and I think he's right, that the way for the U.S. to remain competitive vis-a-vis China is just to skip the gold step and go right to Bitcoin. Because Bitcoin will, in my view, win in the longer term because it's a better form of collateral. It's got a number of advantages vis-a-vis gold. But I think as a practical matter, when you consider politics and how things work, a lot of countries will gravitate towards gold, and then over time, they'll add Bitcoin, and then eventually Bitcoin will replace gold. But these things take time. They take not months, not years, arguably decades. So gold. I had somebody ask me that I had a Bitcoin say that gold's going to go down in value from here. And I said that it's just I see no scenario under which that happens. None, zero in fiat terms. I mean, yeah, it's going down in value in Bitcoin terms, sure. But in fiat terms, gold will continue to go up in value. Bitcoin will go up more. So there's a role for both. I mean, I call gold analog sound money, and Bitcoin is digital sound money. And we live in a digital world. And that adoption curve is why Bitcoin's going to crush gold's performance. So I know a lot of Bitcoiners think gold's just going to disappear tomorrow. And I think they're being, they're not thinking this thing through clearly if they think gold's just going to go away tomorrow. I mean, it's 5,000 years of history. I mean, yeah, it is just a shiny rock. But until Bitcoin came along, it was the base layer of sound money in the world, and has been for 5,000 years in terms of protecting one from inflation. I think Bitcoin is going to steal gold's thunder and perform much better than gold, and will someday demonetize gold. But I don't think, we're a long way from that point. In terms of quote unquote the someday, because it's, first of all, Bitcoin's got to catch up to gold, and that it hasn't done that. And then it's got to push gold down to an insignificant fraction of the total reserves of, risk-free reserves. And it hasn't done that either. So, so gold is going to be a fine place to be, from a lower volatility, sound money, perspective, but Bitcoin's going to crush it in terms of performance, because you've got the fact that it's sound money. You've got the fact that it can't grow in supply. I mean, that's the other thing. Gold does grow in supply. In 40 years, there'll be twice as much gold on the planet as there is today, because we're mining it. And we know the supply of Bitcoin from now until forever. So, Bitcoin's going to crush gold, but that doesn't mean gold's not going to do well nominally versus fiat. Gold's going to do fine versus fiat. I mean, I see gold 10,000 easy. I mean, probably much higher, but I can easily see 10,000. I see, Bitcoin 1 million easy. Where we go beyond that, I think it has a lot to do with government policies. I mean, who's running the show? How much money are they printing? What are they doing? Are they trying to be fiscally responsible? There are too many moving inputs to know with certainty exactly where it's going to go. And both of those are just estimates on my part. But I'm very, very confident they'll both be higher. They will have higher value in fiat terms, kind of every year going forward. Historical fact. Currencies fail when everybody realizes that they can never stop printing money, and it's a mathematical certainty that the printing is going to grow larger over time. That's when currencies fail. That's how hyperinflation occurs. When everyone comes to that awareness, then everyone abandons the currency. There's no demand for it. Everyone wants real goods or something other than the currency, and the currency goes to zero. And that's how you end up with banknotes in the Venezuelan streets or in wheelbarrows in Weimar Germany. So we're not at that stage yet. We're not even close to that stage. But, like I said earlier, if we go towards that stage, and if, the policies are aggressive about printing currency and the MMT crowd wins and says, let's not worry about it. We just, we'll keep the economy growing and we'll grow our way out of it. And we'll just print money to do it. Eventually people are going to come and say, God, they're printing money to do it, but this money is just losing value so fast. I don't want it anymore. And that'll lead to currency failure. And, they're ugly events. They're very ugly events, and I don't wish it on anybody. I mean, what the book talks about, and I have a policy prescription in the book in chapter 22. I mean, what I think they should do is a structured reset where they say, look, they come out and they come clean. They say, you know what, we made a mistake here. We followed this Keynesian model. It's wrong. We don't need continual growth. We don't need to avoid deflation. What we really need is sound money. And so we should start issuing gold-backed bonds and Bitcoin-backed bonds, and we should start trimming the deficit. And we should slowly but surely transition over to a sound money standard. And yeah, by the way, you debtors who hold this old debt, well, guess what? You're going to suffer. But they're going to suffer either way. And, trying to put in good policies that, structure a transition in that direction versus letting it just go to its natural end state, which is, hyperinflation, it would be much better to try and do a structured reset. I mean, just to give you an example, Roosevelt did a structured reset. I mean, there's massive deflation in the 30s, right? Mm-hmm. And Roosevelt said, "Well, this is bad. The dollar's overvalued. We have this huge bubble. We've got all this deflation as all this debt unwinds. I got to fix this." And so, what did he do? Well, gold was the base form of money at the time, and he said, "I'm going to devalue the dollar in terms of gold." He took it down 70%. overnight. He grabbed all the. I mean, he did a lot of shit that's illegal. I mean, I don't know how the Supreme Court supported him. He should never grab the gold. I mean, that was private property that he didn't have the right to grab. But he grabbed the gold. Then he turned around and he devalued, the dollar 70%. And by the way, when he did that, 1934, the market rallied. I mean, we actually had a real upturn in the Depression in 34 briefly, but then it started to go back down again as that wasn't enough of a solution. He hadn't really devalued it enough. And so it really took World War II to get us out of the Depression. But the point is that we need to do a currency reset. It's simple. And we can. Now, you got to have the political stones to do it, and that's hard. But we absolutely positively need to do a reset of the currency. That's the answer to the problem. And the thing is, these hyperinflations, when they've occurred in other places, one of the things you do see is they run to their natural conclusion. But then when these economies return to a sound money standard, they recover very quickly. Ecuador had one in 2000. Brazil has had a couple of them. They recover. I mean, people generally speaking want to, just go to work and make money and pay their bills and take care of their family. And what's broken is the money. And the reason we're all suffering is that the money is broken. And if you fix the money, if you actually go back to a sound money standard, things will get better quickly. I mean, this is not like gloom and doom forever. This is just like, it's like you got a broken bone. You just got to set it and it'll heal. And that's what we got. We got broken money. We got to return to sound money and things will heal and get better quickly.
Every economic era reaches a breaking point, an inflection where trust falters and the architecture of monetary policy is forced to evolve. With fiat creation accelerating beneath a narrative of discipline and inflation quietly eroding purchasing power, more investors are turning toward assets that exist outside political manipulation. Whether through bold revaluations or digital backing, the call for sounder money is no longer theoretical. It's echoing from campaign stages to central bank corridors. The conversation is shifting from if a reset will occur to how it might unfold. Is the stage being set for a financial transformation so profound that only assets with built-in scarcity will survive the shock? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.